In this video, we're going to cover whether you and your spouse should get a family health insurance plan or stay on separate plans. Hey guys, and welcome back to my channel. If you're new here, my name is Shamy. I'm a healthcare finance consultant, and this channel is all about helping you understand your health insurance to save money. So if that's something you're interested in, please subscribe down below. It's wedding season right now, and whether you're already married or planning your big day soon, it's smart to know your options when it comes to couples' finances, and that includes health insurance. Things like your premiums, deductibles, out-of-pocket maximums, and how much you both actually use your plan all play a role in what you pay and what type of plan is best for you both as a couple. Alright, so let's start by talking about 3 different scenarios: a best case scenario, a moderate case scenario, and a worst case scenario. This will help you figure out when staying on separate plans might save you money or when a family plan makes more sense. So let's start off with a best case scenario. This is when you both stay healthy and just get your annual physicals or take advantage of other free preventative services offered by your plan and don't even come close to hitting your deductible. In this case, your minimum cost is simply your premiums. Let's say your health insurance premium costs you $5,400 for the year, and your spouse's premium is $4,800 annually. So together on separate plans, you're paying $10,200 a year in combined premiums. Now say you decide to get on a family plan together. That family plan might cost you $11,800 in premiums for the year. So in this best case scenario where you're both healthy, staying on separate plans would save you about $1,600 a year because paying more in premiums isn't worth it if you're hardly using your plan. Now let's take a look at the moderate case scenario. This is when you both meet the deductible but don't hit your out-of-pocket max. This usually happens when you do things like have specialist visits, have sick visits, or go to the urgent care. So let's say your deductible is $1,500 and your spouse's is $2,000. Or your combined deductibles are $3,500. Add that to your $10,200 in combined premiums, and a separate plan will cost you $13,700 a year. Now with a family plan, your deductible might be $3,000. So you'd pay $11,800 in premiums plus $3,000 in deductibles, or $14,800. In this situation, separate plans still save you $1,100 a year because even though you're using the plan more than you did in the best case scenario, it's still not enough to compensate for the increased price that a family premium carries. Finally, let's go into the worst case scenario. This is when both of you have an expensive year medically and end up hitting your out-of-pocket max. Maybe you need surgery or are diagnosed with a chronic illness that needs a lot of medical care. So let's say your out-of-pocket max is $6,500 and your spouse's is $7,000 or $13,500 total. Add that to your $10,200 in premiums for a grand total of $23,700 of medical expenses for the year on separate plans. Now on a family plan, the out-of-pocket max might be $12,500. So with your $11,800 of family plan premium, that's $24,300 total medical expenses for the both of you. So in the worst case scenario, a separate plan still saves you $700. Alright, so next up, let's talk about your actual medical needs and the doctors you already have. Because even if the numbers look good, it doesn't help much if you can't see the doctors you trust. So for starters, if one of you has a serious or chronic condition and you already have a team of doctors who all take your current insurance, but they'd be out of network on your spouse's plan, then you'll probably want to either keep separate plans or have your spouse switch onto your plan so you can keep your care uninterrupted. Another thing to think about is if one of your plans simply offers more comprehensive coverage but still has a reasonable premium. Maybe one plan covers lots of specialists, therapies, or has low copays on brand name meds, while the other plan is super basic. In that case, it might make sense for both of you to jump onto the better plan, even if the premium is a bit higher, because over the long run, it could save you a lot of money and hassle. So we've talked about your costs, your doctors, and what makes sense right now, but you might be planning ahead and thinking about future children and how that changes your health insurance needs. Because if you're planning on having kids, you'll need a family plan to cover the baby. And the good thing about family plans is that they usually come with one combined family deductible and out-of-pocket max, which is often lower than adding up two separate deductibles and out-of-pocket maxes. This can protect your family financially if multiple people in the family need significant care in the same year, because you'll have lower caps to hit for your deductible and out-of-pocket max before your health insurance starts paying a significant portion of your care under one plan than you would have under two plans. And finally, let's talk about something most couples totally overlook when getting married, which are healthcare accounts like HSAs and FSAs. So here's the deal. If you have an HSA and your spouse has a traditional FSA, the IRS actually gives priority to the FSA and disqualifies you from HSA eligibility because it considers the FSA to be other health insurance. And unfortunately, that means you're no longer able to contribute to your HSA, though you can still spend the money that's already there. Now, there are two big exceptions. If your spouse's FSA is a limited purpose FSA that only covers dental and vision care, or a dependent care FSA for childcare expenses, you're still totally fine to contribute to your HSA. Now, this is actually changing in 2026 because the new One Big Beautiful Bill that was just passed allows couples to have a traditional FSA and an HSA between them. Another important note about HSAs is that if you and your spouse have a family high deductible health plan and have an HSA, only one person can own the HSA, even though you both use it for your healthcare expenses. And if that makes you uneasy to have thousands of dollars sit under just one person's name, and honestly it should, especially if you're a woman, because it's so important for us to protect ourselves and have ownerships of our finances even in marriage, then you and your spouse can each open your own HSA and just make sure that your combined contributions stay under the family limit. That way, you both have direct control and ownership over your healthcare expenses while still getting all the tax benefits. If you and your spouse are still deciding which plan is right for you, don't miss my video on how to choose a health insurance plan. It walks you through different plan types for your lifestyle and budget using a fun travel analogy. Thank you so much for watching, and I'll see you in the next one.